Hey everyone, and welcome to Earnings Cheat Sheet for Friday, April 19th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And boy, oh boy, Ed, it's a big week with major tech earnings and a majority of the Magnificent Seven stocks reporting. And those results could make or break the market uptrend. So, Ed, what do you have on tap for us today?
Well, we're going to talk about a few companies. We're going to talk about Google parent Alphabet. We're going to talk about Tesla. We're going to talk about Meta Platforms and Microsoft.
All right, well, let's start with Tesla, which has been not so magnificent. The EV maker reports earnings on Tuesday, April 23rd. And let's take a look at the cheat sheet. Earnings are expected to fall 42% to 49 cents per share, and revenue is expected to fall 5% to 22.3 billion. Shares have taken a hit after disappointing Q1 delivery figures and news this week that the company plans to lay off about 10% of its global staff as the slowdown in EV demand continues. And here's why we're watching Tesla. There's going to be a lot of questions that need to be answered for investors on this Q1 earnings call. And we'll be noting Tesla's cash burn and cost cutting strategy. And we'll be looking out for comments from Elon Musk on full self driving and robotaxi plans and any updates on those small EV plans. So, Ed, the year just keeps getting worse for Tesla. I feel like I don't know what is the more ominous indicator that they're losing Dan Ives or that Kathy Wood is snagging up shares.
That's a good point because she likes to buy stocks as they're heading down, and she's been buying a lot lately. Yeah, Tesla has a lot of issues here. Tesla stock has been plunging, but so have its earnings estimates. And so that's it actually, by a valuation measure, actually hasn't gotten much cheaper. One reason why we're going to look at cash flows is because we're not entirely sure Tesla has some avenues to boost earnings, like with some deferred revenue from full self-driving, and whatnot. But the cash might tell us if they're actually going to burn cash for the first time in a while. The real question is the conference call. What is their strategy? I think analysts are really puzzled. I mean, if as indications suggest that they're going to be knocking out a small EV either for several years at minimum, it's not clear what the growth prospects are unless they solve full self-driving, and that doesn't seem to be likely to happen in the near future. We're talking, so it could be years before Tesla grows again, and this is a growth stock. It's certainly priced like a growth stock, and so that's the big question there is like, well, what are you doing? Not saying that it can't eventually solve it, but that's a long-term question out there. So I think the conference call is going to be it's going to be very important because analysts really are questioning Tesla's strategy in a way that they haven't probably for several years.
Right. And as you mentioned, it's not the first time we've heard about full self-driving or robo-taxis from Tesla. So will be interesting to see if there are more details there for investors. All right, well, let's take a look at the chart then, Ed. And, shares getting hit again this week, down about 12% and undercutting those 2023 lows. So as we're heading into earnings here, what are you going to be looking at in terms of Tesla chart?
I mean, the chart is not now breaking sort of the last support it has, for quite a while. It's not in good shape. It's not in a position to be buying or selling at this point. And so if we're on the pro side, I mean, there have been times that Tesla's been a buy, obviously had hit huge runs, but there are times to avoid, and this is times to avoid. Now, it's going to take a lot to get it back into a position. It needs to get moving above all its moving averages, the 50-day line, the 200-day line. And so I guess another thing is that the relative strength line, which is that blue line in the chart, that's getting close to undercutting the lows from January 2023, which have been then like a 4 or 5 year low, in which case then it would be like you would have been better off buying the S&P in late 2020 rather than holding Tesla. And that's such a shift after the enormous gains Tesla had in 2019, 2020.
And Ed, if history is any guide, seems like the stock hasn't really reacted well over the last handful of earnings reports. So if you're an investor and you have that conviction with Tesla, what really then should you be looking for once these numbers come in?
Yeah, it's difficult to say because the numbers that people keep on expecting some positive numbers, but Tesla hasn't been able to provide that. It really is becoming divorce because strictly outside of full self-driving and robotics and AI, which are not, those have not been achieved yet. I mean, Tesla makes money off the FSD program, but to actually becoming something that's a robo-taxi, that's way off. So there's not much they can say except we hope to achieve these things. They can't really say, look at metrics really and say that. So it's really making a bet that they will solve that. Whereas the existing business, at least the core EV business, looks like it's going to struggle for quite a while. It's not clear. You almost have to say, I want to look at Tesla, the stock, as something that's not an EV company, even though the company is mostly an EV company.
Right. I think we've been kind of hearing that they're a tech company, they're an AI company. So I guess we'll hopefully get some more details out of this call next week. All right, well, let's take a look at Meta. The social media giant reports its Q1 results on Wednesday, April 24th. And let's go to the cheat sheet again. Earnings are estimated to rise 96% to $4.31 per share. Revenue is also expected to climb 26% to $36.1 billion. And here's why we're watching Meta. It's been a comeback story after a year of efficiency. And we'll be looking to see if Mark Zuckerberg and company can deliver a fifth straight quarter of accelerating growth. We'll also be looking for any comments on capital expenditure investments, and the stock is trading near some key moving averages. So Ed, what are you going to be looking for, or what should be on the radar here as we head into Meta earnings?
They've been really rebounding, and it's been really strong. You want to see, as you were saying, can that growth continue to accelerate on the revenue side? And how will they control costs? They're spending a lot of money on AI. I mean, they are, like a lot of these tech giants. Can that growth, more than absorb those enormous spending on AI? And they're still spending on the metaverse, even though nobody wants to talk about it other than Mark Zuckerberg. So they're still spending a lot of that. That capital spending will be important for a lot of suppliers like Arista Networks. What they have to say about online sales matters heading into Google, and it's also about AI in general. So we're going to be getting that kind of a lot of sense about what it means, touching on a lot of areas there. This has been one of the best performers out there. What an amazing run it's had. So can that continue? This is really going to be an important earnings report.
All right, well, let's take a closer look at the chart then, Ed. And as you said, it's been quite a run for Meta. And again, we'll just note we've had, again, these really great quarters of accelerating growth. Recently just hit an all-time high of around 530 back in March. So a lot of positives here on this chart.
A lot of positives. It seems to be holding up better than almost any other tech giant. And you can see the relative strength line is basically right at highs. So while the market is really struggling, has been struggling, that is holding up well. Perhaps it could set up again, either because of this 10-week line test or whatnot following earnings. So it's even potentially there that it could be actionable. But the one question is that, are the earnings going to be strong enough and the guidance strong enough at this point with expectations? Because it's delivered such great numbers, people are expecting great numbers. That's always an issue with sometimes it's after these amazing runs. It's such a huge company. How fast can it continue to grow as these comparisons get more difficult? But stock chart has done great. It's holding up well. So this is one of the few tech giants that really is looking strong heading into earnings.
So then if we are looking at as a potential entry point, then would you say that most recent high of around 530 is what investors should be eyeing, or how the stock reacts around that 10-week line?
Yeah, if it bounces strongly off that 10-week line, that could perhaps provide an entry after earnings. I don't think ahead of earnings, unless you're doing an option play, you want to be getting in front of that.
All right, well, let's go to the next name on our list, which is Microsoft, which reports earnings on Thursday, April 25th. And those earnings are estimated to rise about 15% to $281 per share. And the street expects revenue to climb 15% to $60.8 billion. And here's what we'll be watching with Microsoft. This one's going to be a big gauge of where we are with that AI wave. And we'll be focused on Azure revenue growth and any evidence of AI monetization. And again, shares are also trading near that 10-week line. So Ed, again, another really important barometer here. What are you looking at heading into Microsoft earnings?
Yeah, I think you nailed it with the Azure cloud computing and AI monetization. This is perhaps the most important report because it touches on so many things: AI, cloud computing, business software, the fact that it has impact on PCs, how much spending it does. So just there are so many companies, rivals, suppliers, and whatnot that can move on this. If Microsoft can monetize AI, that is really important for all these other companies. It doesn't mean that they'll be able to monetize, but if Microsoft can't, with its sort of lead and it's pushing it, then that's the struggle for. Then what's the chance that others will be able to? So that I think is really important. It's been a really solid performer here. The Azure growth has outperformed. They've given some cautious guidance. That's another thing, is that they will give guidance. It comes a couple hours after the earnings, so it's sort of like you're waiting around. Oh, Microsoft is doing this or that, and then come the conference call somewhere in there. Then they give the guidance, and that often swings the stock. So, but that's going to be really important. They've been giving cautious guidance that they tend to end up beating. Then, but this is such an important report for the entire market.
All right, well, let's take a look at Microsoft's chart then. And again, this week, a lot of tech names getting hit. So, on pace to close below that 10-week line. But, after trading a few weeks tight here, after a breakout, what are your thoughts with the action here?
Well, yeah, I mean, like so much else, it's like even the leaders have been struggling here. If it's a strong report and we have a better market, one can imagine it coming back up at the end of, after after Microsoft earnings. About that time would be when a flat base could form, assuming the stock doesn't collapse. So that could be another potential setup as it runs back up. On the other hand, if it starts falling more significantly, especially after earnings, that would be maybe a sell signal even for maybe longer term investors. Just sort of like, well, maybe I should take some partial profits, and that would also probably signal that the market is really not doing, which has obviously been struggling. I will say is that despite its woes, the relative strength line is holding up reasonably well. That's pretty close to highs here. It hasn't really lost ground. I mean, that's a reflection of the market, and the fact that it's coming down, but something to it's still definitely one to be keeping on the radar, because this one might be able to turn around again pretty easily here.
All right, well, let's go to the next name on our list. It's another Magnificent Seven stock reporting on Thursday, and that's Google. That's Alphabet if you're nasty. And earnings are estimated to rise about 29% to 151 per share, and revenue expected to climb 13% to 78.7 billion. And again, another important AI barometer here. We'll be watching what Google reports on their core digital ad and search business, and how those AI chatbots are impacting search. And this one is still trading in a buy zone after a recent breakout, so could potentially be actionable here. So Ed, what is on your mind here going into Google earnings?
As with Facebook, but even more than Facebook, Facebook parent Meta, want to find out that online advertising, see how that's going. Really good barometer on that front. So that's been, and yeah, AI. See, AI, unlike Microsoft, it's more of a revenue opportunity, but to a certain extent, Google, it's like, yeah, it's a revenue opportunity, but partly it's, they're spending a lot of money to stay where they are, is the idea. So can they make that really turn out to be a benefit, as opposed to we're going to spend a lot of money and hopefully hold on to what we have? So that's a question. So people really want to see how that is progressing. They have had some setbacks on AI at various times over the past year. Obviously, there's some momentum. It feels like, again, on that front, but that would be those are the things that people are really going to be looking for.
All right, well, let's take a closer look at Google's chart then. As we mentioned, still in a buy zone after breaking out of consolidation. Again, RS rating trending higher, week ahead of earnings. What are your thoughts here, Ed?
The RS line is improving. It's still not at highs, even though the stock is clearly at highs. That shows you how it had been lagging, a few months ago. Wasn't moving as powerfully as a lot of the other names like Microsoft or in the S&P in general. Coming on now. If you look a few weeks ago, there hasn't, there's been some more pink spikes on the volume. You can see there. So the down weeks have come in higher volume, and the uptrend here, there's been some volume, but it hasn't been tremendous. So that's something to be looking at. So just as one note of concern. But still, this chart is going well. That the issue is here is that it's hard to be buying it ahead of earnings, and if it does well, that could easily gap out of a buy zone. Obviously, it does well poorly, it could come down. So it may be tricky uh, to play earnings with this name, but it's coming on now. That's been an area of a little resilience for a market that desperately needs some big names holding up.
And for investors that are maybe newer to the game here, can you talk a little bit about what you look for on, say, that opening trading day, that first 5, 10, 15 minutes? What are you like looking for in general, just to see if the stock is going to gap up or if it's going to go south?
I mean, we generally, from terms of like buying it, a stock, I try to avoid the first few minutes, 5, 10, 15 minutes at least, maybe even half an hour, just because there can be some whipsaw movements. There's a lot of excitement, and maybe some other folks are like, all these buy orders come in, and then the stock tumbles, or the other way around. I mean, a stock could tumble, and you might just wait a few minutes to see, okay, well, maybe now I'm going to wait. Maybe I'll take some partial, cut my position in partially, and then see what happens, because there can be these big swings. Stocks will gap up or down, and then sometimes it'll hold and the momentum will continue either way, or sometimes it'll reverse back. So it's just generally better to wait a little bit on some of these names. And those earning openings can be pretty wild and whipsaw for investors if you're not careful.
All right. Well, Ed, we highlighted a few of the big earnings next week, but let's go into lightning round because there's just a lot that's out here, a lot of pivotal reports coming up. And let's start with ServiceNow, which reports April 24th. Give me your thoughts on this chart. Again, this one's setting up in a flat base with a 815.32 buy point.
Like a lot of names, it's really come under pressure this week. So that's an issue. Like along with Microsoft, maybe even more so, this is going to really tell a tale for a lot of software names. So, it's a big cap, pure play software giant. So very important.
All right. And we have more semiconductor stocks reporting next week, including Lam Research, which also reports Wednesday, April 24th. So Ed, again, potentially setting up here in a flat base, but like you said, a lot of stocks under pressure. So what are you going to be looking at with Lam Research?
Yeah, can Lam Research and any of these other chip gear names bounce back after ASML had bad results earlier this week? And, so not looking, they were looking really good, and now they're not. Can any of these, stand out and buck and rebound and buck the trend?
All right, well, let's take a look at KLA. That's another chip name. They post their earnings on April 25th. Again, similar action here, flat base, 729.15 would be a buy point. But again, under pressure, it's the same old story here, Ed.
Same old story. Yeah, this same reasons. ASML, maybe Taiwan Semi not raising its capital spending plans. It's not broken, but it's definitely cracking. So it needs to get better here.
All right, well, let's hop over then to GE Aerospace. And this one, I mean, what a fantastic run here. We also just had that spinoff happen. So Ed, this one looks well extended above, especially that 10-week moving average here. So what are you going to be looking at with GE Aerospace heading into earnings?
Yeah, it's going to be their first report after the breakup, though. We sort of have a pretty good idea how that's coming doing. Yeah, just tremendous run. It'd be great if it could consolidate, given other opportunity. But this one's putting the space in aerospace because it's going to the moon. It seems like, and really just needs to pause for investors to get involved. But great run.
All right, well, another name on our radar is Caterpillar. They post results on April 25th. And again, Ed, this one, another nice one, breaking out, has a nice run here, but looks like it could potentially be flirting with that 10-week line. What are your thoughts on Caterpillar?
Yeah, Caterpillar's doing pretty well here. It's interesting because people are expecting a bounce back with construction and the infrastructure spending going on. Not really seeing it in the numbers yet. Some of that, but see if that can bounce back off of that. It hit the profit taking zone, sort of that green shaded zone. So maybe it'll need time to set up, or maybe it can bounce off this 10-week and have another run from that.
And our final name today is Lockheed Martin. The aerospace company reports on April 23rd. This one's setting up in a pretty long consolidation here, official buy point of 508.10. So Ed, what are you looking at in terms of this chart? It looks like it could be getting closer to trend line maybe.
I'm interested partly because there's some defense spending as well, that there might be some bills that could be in there. Obviously, there's a lot of conflict going around in the world. That has not really paid off for these defense names, to be honest with you. So we'll see. The relative strength line has lagged on this one. Maybe this can move out. The combination of GE and Lockheed could also give you an idea of how the aerospace and defense, because there has been some strength in that area. Lockheed could potentially offer a buy point, but its lagging nature raises questions, about how much you would want to get involved. But a giant name here, and might give you some indications about how that broader sector is doing.
All right, well, that wraps it up for this edition of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Coram. That goes live after the closing bell. And be sure to follow us on X or Twitter at IBD Investors. We'll be posting a curated calendar of all the notable earnings reports over the weekend to help you prepare. So you definitely don't want to miss that. And thanks so much for watching. We'll see you all next week.